So for this one, let's go ahead and just save our little workbooks here real quick. All you're going to be just needing is just your financial forms, okay? Because this one is going to be what we're going to be primarily using for to compute or to complete our financial statements. So, right? Since we did our duties by computing every single account, and we used main account. So it's going to make filling out our financial statements a lot easier. Now for this one, for the financial forms, you're going to be needing your adjusted trial balance as well as your unadjusted trial balance. But the unadjusted trial balance won't be needed until you compute your cash statement of cash flows, okay? We're going to go through one at a time, each one at a time. So again, we're going to be primarily just using the unadjusted and the adjusted trial balance. For now, just the adjusted trial balance to go ahead and solve for our income statement, okay? So here's our income statement. So what I did here is I kind of filled out some of the bubbles for you, just so then you had an idea of what we're going to be doing here. Okay, so first things first, right? I've mentioned before, we're going to keep our our sales returns and our sales discount as separate accounts here.
I can barely see that. It's not covering the whole screen, only half of it. Or is it something I did?
I don't know.
I had the whole screen.
It was mine. I got it now, sorry.
Okay, no worries. Okay, so here we have our very first one is the income statement. Now, as we see here, our form looks kind of similar to our debits and credits, but however, it does not act like debits and credits. So the idea here is we're going to forget about debits and credits, and we're going to focus on just the values only. So right now, right, my total amount of sales, right, is going to include, right, my total sales minus out my returns minus out my discount. So in this case, right, let's go ahead. What was my total sales that I've collected for the month of June? So going back to your adjusted trial balance, right? Okay, what was the total amount of sales that I calculated? Let me find my sales. Loans, here we go. What was the total amount of sales? The main account.
30,549 cents.
Good, right? And here I'm just going to cell reference because I'm in the same workbook. It will work that way too. So I just copied and pasted over, right? Now, let's see this. So, like I've mentioned before, right? Notice this, right? Because I use my main account, instead of having to type out all my sales, right? Sales medium coffee, sales medium supreme coffee, sales ceramic coffee mugs, right? I've already summed it all up into one, right? This was my total grand sales amongst everything that I had available that I sold, right? Now, what about my sales returns and allowances? What was my total sales returns and allowances?
$19.96.
1996. Now, this is what I like to do. I like to throw in a negative sign ahead of time so then I can just equal sum the column. So here it shows that I have a negative $19.96 amount, right? Because that's what in accounting, when you do negative numbers, we display it as either in parentheses, okay? Rarely do we use actual like negative numbers, but in this case, however you have it formatted, if you like it to have dollar sign or currency, then it will show up as like parentheses, okay? So that's right, because when we do sales, right, this is what counters against it, right? What about my sales discount? I'm gonna actually change my account name. I don't, it's supposed to be sales, returns, and allowances. Okay. For what about my sales discount? What was my total amount of sales discount?
$1,979.
1,979. So what I'm doing here is I'm making a kind of column that I can use to calculate my totals here. So here, what is my total sales, right? If I started out with 30,549, right? I had a return of $19.96, and I had total sales discounts of $1,979. So in this case, what is going to be my total amount of sales?
28,579.74.
28,579.74. So that's the total amount of sales that I accumulated in the month of June. Okay. Now, first thing that we're going to do, so that's just my total sales. Next thing I'm going to solve for is going to be my gross profit. So once again, we're going to counter things that decrease, or in this case, my expenses that are directly correlated with my sales. So in this case, right, I sold coffee and coffee mugs, and I also used the coffee cups, the sugar, and the creamer. So in this case, what is my total amount for my cost of goods sold? Right, so here I've summed it up. What's my total cost of goods sold?
$4,954.
4,954, right? I placed a negative before there. So it shows me that I have a negative 4,954. And what was my total cost of materials?
$1,040.79.
1040.79. Okay. So then what is going to be my total gross profit? Okay, so if I started with 28,000, right, of sales, minus out my cost of selling my coffees and my coffee cups and everything, what is going to be my total amount of gross profit?
23,529.41.
Okay, so that's your gross profit that you've earned from generating revenues. Okay, now we need to counter them against all of the expenses that we had to incur for operating our business. Okay, so starting one at a time, right? We're going to go ahead and take a look at our adjusted trial balance, because there we calculated all of the main accounts that it took for us to run our business. Okay, so in this case, I'm going to left align them. Okay, starting with the very first expense, right? Under operating, under adjusted, under operating expenses, what's my first one I have?
Advertising expense.
Advertising expense. So what I'm going to do here is I'm going to use my left column to just give me a total of all of my expenses, or for each account. And then on the right, I'm going to do a grand total equal sum of all my operating expenses, okay? So in this case, right, that's how I'm going to use my table. I'm going to go ahead and say my advertising expense. What was the amount there? 185, right? That was my very first one here. What's my next expense that I had to deal with?
Bank expense.
Bank fees, right? For a total amount of
$1,282.78.
Okay, so that's business expense from bank fees.
Oh, wrong one, 369.64.
369.64, okay? What about the next one, which is we know to be our business expense, okay? For a total amount of
1282.78.
1282.78, okay? What's the next account that we encountered?
Freight expense.
Freight expense. Now, of course, if this has a zero value, you don't need to throw it in there because it serves no purpose to, it doesn't increase your income or it doesn't decrease your income either. So in this case, you don't need to add freight expense, okay? Because there's no value there. So in this case, my next one is going to be
Insurance.
insurance expense for a total of
195.83.
195.83. Okay. Next one
I glitched out for a second. Is there any way you could do the split screens?
no, because this is all on one
All in one
worksheet. Yeah,
Okay.
yeah. So let me see. I'll go ahead. Let me just do this last one, and I'll let you go ahead and yeah. So we'll do labor expense, right? Business insurance, labor expense, right? Labor expense. How much was labor expense?
2142.
2142. Okay. So all I'm doing right here is I'm copying all of my operating expenses that I've incurred in the month of June. Okay. So starting from the very first one, right? This is all of the expenses it costs me to operate my business. So I'm copying from my adjusted trial balance, right? And bringing it over into my income statement. So in this case, I started off with my advertising expense for 185. Had bank fees. Okay. My business expense, insurance expense. So no freight expense because it's zeroed out. There's no balance in there, so that doesn't really do much even if I add it on here, right? Zero does not affect my income or does not affect my expenses. So if you want to add it in there, you can. You don't have to. It's zero. Then I have insurance expense and then labor expense. Okay. So then, what's after a labor expense?
Subcontractor expense?
Mm, okay, so these two are already summed up under labor. We're just focusing on the main accounts. License and permit, good. For a total of,
Oh, you're just cell referencing, huh?
yeah, that way I don't have to type it all in.
$375.
375. Okay.
Loss on disposal of asset?
Okay, next is loss on disposal of asset, good. For a total of
2,000.
$2,000, good.
Office supplies
Office supplies, good.
for
For
$7.
good.
Payroll,
Payroll,
1393.94.
Okay.
Rent expense,
Mm-hmm. Oh, well, yeah, purchase. Yeah, there's no purchase returns allowances, so rent expense is the next one.
1,500. Bad debt expense for 76.60. Depreciation expense for 625.95. And the amortization expense for 1167.
Okay. Right. So once again, here I'm gonna go ahead and type in this little column right here. That this is going to be total operating expense. In this case, I'm going to also left align it, or I'm sorry, right align it. So then I know that this is a total cost here. Okay. So here, I'm just going to go ahead on the right side column now because my left side was just listing out all of my operating expenses. Here I have a total, so I'm going to go ahead and equal sum. I'm actually negative equal sum, so I get a subtracted number or a negative number. And I'm going to go ahead and click and highlight my total operating expenses. Okay. And what should I have?
I got kind of lost right there because I glitched out for the top half.
Okay.
Negative 10,228.41.
Negative 10,228.41 is my total operating expenses. Okay.
Can I see the top real quick, please? A little bit more. Like that. Was it, so the sales return, how did you get that to be a negative?
I just put a negative sign in front of it.
Okay.
So if you want to see, I just typed in negative, right? Okay.
Negative 1,900. And then you equal sum the sales returns, and sale discounts.
Correct, to get the total sales.
Sorry.
No worries.
It's profit. The gross profit was the total sales and then the cost of goods and cost of materials.
Yes, and because these are directly correlated, right? This is the expense it took me to sell the items. So sales, and then you're going to subtract those two numbers out.
Okay, got that for the gross. And then what was your equation on the bottom for total operating expense?
I just equal summed all of my operating expenses.
Equal negative sum.
Oh yeah, in this case, yes, equal negative sum.
Oh, crap. Okay. Equal negative sum 23, 529.41. Negative 1040.79. I get a way different number.
Okay. So, okay, starting on the left side, we have advertising expense, bank fees,
185, 369.64, 1282.78, 195.83, 2142, 375, 2000, 70, 1393.94, 1500, 76.60, 625.95, 1167.
okay. Make sure you're not including your gross profit because that's going to be calculated later. It's just only your operating expenses.
I think I'm confused on that part.
You're only okay, so this right here, this column, we will calculate our total net profit, but we're not done yet. So right now, I just need you to calculate your total operating expenses only. So this is, yes, this is my total operating expenses.
Okay, so equals negative sum, but it's column B.
Yes. From advertising of 185 all the way down to,
228, okay,
okay, good.
sorry.
Now the last thing that we have here is we have other income, right? What is my other income? What else did we have that was considered other income that we generated in our company?
Did we do sales?
That was the very first thing that was started off with.
Would it be the wages?
Okay, so wages isn't part of sales.
Deliveries,
What was that?
Prepaid?
No, nope. So all we're focusing here when we do our income statement is we're focusing with all our revenues, subtract out all of our expenses. So none of those are going to be in those.
the deliveries of the coffee,
Deliveries of the coffee, right? Delivery income, right? That's not our main core of operations, right? Our core of operations is to sell coffee. So in this case, this is going to be considered other income. Okay? So if that is other income, right? Because our business isn't surrounding by delivering coffee, it's to sell the coffee. So that's going to be other income, which is going to be considered an addition to your income by increasing by $300. Okay? So then my net profit, right, is going to be my gross profit of 529.41, right? I'm going to subtract, or in this case, I'm going to add my total operating expenses. All right. And I'm also going to add my $300 delivery income because that's considered other income. So in this case, what is my net profit or net loss?
we made money, $13,601.
$13,601 even. Wow.
Can I see that formula again?
your gross profit. Okay, if you had this as a negative, you're going to add your operating expenses and you're going to add your other income. Okay, you can also equal sum it if it makes it easier for you to just do that.
I got it.
Okay, so there we go. Yes, we made a $13,000 profit. Okay, yay us. Okay, so that's how we compute the very first one, right? We're testing profitability, which means we're going to take all of our revenues and we're going to counter them against all of our expenses. And that's all you have to do for to test profitability. Okay, so in this case, we have a positive number, meaning we had a profit. We made money. Okay, so then now we're going to go ahead and move on to the next financial statement, which is the statement of owner's equity, right? At the very, very top of owner's equity, we have net income. Why? Because as a small business owner, the first thing you want to do is you want to reinvest into your company. In this case, this is our first month. We don't want to be hasty because we owe a lot of money to other people, right? We owe to pay off our purchase expense. We got to pay off our credit card. We got to pay off our sales tax payables. We have to pay off our loan. So in this case, it would be very highly suggested that we reinvest into our company instead of take that money out to ourselves. So this is how we're going to fill out our statement of equity, right? Just like this, I filled it in for you guys just so you guys have an idea. So the first thing we're going to start off with is what was the beginning balance of our equity account? So in this case, what was the beginning balance of my equity account?
30,000.
30,000, right? We're not going to associate credits and debits and credits here. We're just making it clear that I started out with $30,000. Boom. Okay. What was my net profit amount?
The 13,601.
13,601. Okay. And then, of course, owner's withdrawal reduces your amount of equity. So in this case, how much was my owner's withdrawal for?
3,000.
$3,000. So in this case, right, I'm going to calculate this on the side. This is how much I'm going to increase or decrease my amount of profit, right? I'm going to take my $13,601 and I'm going to subtract out my $3,000 to give me a total amount of what?
10,601.
10,601. And I'm going to add that to my total equity to give me my new equity balance to become what?
40,601.
40,601. And that's my brand new equity. Okay?
Okay, the 10,601 was because of the net income minus the owner's withdrawal?
Mm-hmm.
Where is it wrong here? Equals D6 minus, oh, it would be a plus, right?
If you have it as negative 3,000, then yes, you add them together.
And then add the 30,000. Okay.
Okay, so that is my total new value of my company. I am now $10,000 higher in value. Okay, I started with 30,000. Now I'm at 10,601. Okay. So then now we move to our balance sheet. Okay. The balance sheet is going to test me on my equation of my accounting equation, right? Which is my total assets are going to equal my total liabilities plus my equity, okay? So in this case, I already know what my equity is, right? I already solved it, but let's go ahead and just take one step and just do each one at a time, all right? What I'm going to do is I'm going to have my left column be all of my assets and my right column will be all of my liabilities and equity, okay? Just so then we keep it a little cleaner, okay? So first thing we're going to do is we're going to basically list out all of our assets, okay? So in this case, right, what was the very first asset that I have? And we're doing main accounts once again. What's my total
Accounts receivable?
bank? Okay. My bank account's my very first asset, right? And in this case, how much is my total bank right now?
13,952.60.
Good. Now, what is my total accounts receivable?
14.
Oh, sorry. 14, yes, good. 14.55. Okay. You have a choice here. You could display that you have your accounts receivable as something in your contra account exposed here, but once again, you're still going to get the same answer of the 14.55.35. Okay. Right, next account. What's my next asset that I have?
Business supplies.
Business supplies for a total of
1550.89.
15. Where did you get that number? 15.
Yep, 510.
I'm
Yeah.
on the wrong one.
At 510.10 for my business supplies, yes. Okay. Right. What is the next asset that I have?
Office supplies for $80.
Office supplies for $80. Okay. What?
Inventory for 611.
Inventory
17.
for 611.17. Good. What's my next asset?
Furniture for 89.26.20. Office equipment for 27.67.76. Equipment for 84.85.57. Vehicles for 31.951.23. And then the prepaid deposits and goodwill, right?
Mm-hmm. Okay, so prepaid deposits, and you said goodwill. How much is my prepaid?
6654.17.
How much was my deposits?
1700.
And lastly, what is my goodwill?
2088 and 33 cents.
20.8833. So once again, go ahead and do your equal sum, and let's calculate our total amount of assets.
$79,182.48.
79182. Yes, that's what I got. Now let's go ahead and list out all of our liabilities. So let's start with the first one. What is the total of my accounts payable?
6620 and 91 cents.
Okay. Next account here. So Visa payable has 0 balance, so you don't need to put that in there. What's after that?
Notes payable.
All right. What's my 6 good? 649.49. Okay, what's next?
Payroll liabilities for 791.54.
Okay.
Sales tax payable for 2046.11. Interest payable for 2829. And truck loan
Okay.
for 28,445.14.
Okay. So what's your total liabilities here?
38,581.48.
38,580. Yep. All right. All right. What was your total equity? So in this case, you could put in here total equity, right? And left align it. I'm sorry, right align it. So what was my total equity, right? I solved it from my statement of equity. All right, what was it?
$46.01.
4601. So let's go ahead and solve for my total liabilities plus my equity. And what do we get?
$79,182.48.
Okay. If you want to, what I like to do is I like to total them up side by side at the bottom. Okay, just to make sure I don't have any discrepancies here. And I do a little quick formula just to make sure that they're zeroed out. And in this case, boom, right? 79,182.48 and 79,182.48. So here our accounting equation holds true. Our total assets equals our total liabilities plus our equity. All right? Yay.
Second.
Yes. Oop.
Total liabilities on equity. And then on that total on the bottom, you just cell reference that to,
I just took the two numbers down and just put it next to each other so I can see that they're hand in hand the same. It's optional. You don't have to do it if you
Okay.
already have your total assets and your total liabilities plus your equity. I just do it so then
right,
I know for sure that they are matching side by side. All right, so excellent. Once again, our accounting equation does now equal and it works out. So there's no discrepancy there. Okay, so notice this, every single statement we build, they are linked to one another, right? Here we have our net profit, right? Which carried over to our equity, statement of equity, which when we solved for our new equity, we carried it over to our balance sheet. Okay? All right? Last but not least, now, I'm going to give you guys a fair warning here. This is probably one of the most difficult statements to compute because this one is actually kind of tricky to understand. There's many ways and rules that you have to kind of follow when it comes to this, but I'm going to teach it the best I can to try to get to how to try to compute it. But for out of the many years, right, or many times I've taught this class, I've never was able to get to zero. Okay, so you will have a discrepancy. I cannot tell you where, and I cannot tell you how, but I can at least show you the general idea of how to get to where you need to be at or how to compute it. Okay, so let's take a look here. The very first thing that when we're looking at the statement of cash flows is that we are taking a look at how our money has changed from the very beginning of the year. So if you notice this, right, we need to look at the amount of cash flow that we started out in the very beginning of the month, and then telling me now how much cash flow I am supposed to be having at the end of June, okay? Now, as we go through this, right, what we're going to be noticing is that we're going to have operating activities, right? Anything that we either acquire, right, as an asset or whether we owe as a liability, right? So that's going to be anything that does the main core operations, right? Then the second section we're going to be looking at is investing activity. So anything that we invest, such as fixed assets, right? Something that we contribute to the business, right? And then, of course, financing activities is pretty straightforward. Financing activities is going to be determined as any bank loans that you took in order to finance your business, right? So in this case, we did a truck loan, all right? So long-term liabilities usually are there, okay? So let's go ahead and just dive right in and I'll explain each one first. So first off, you're going to start off with your net income, right? I'm going to go ahead and use this on my right side so I can go ahead and figure that figure out, right? So in this case, what was my net income or my net profit?
13,601.
Right? That's where we're going to start off is my total net income of my 13,601, right? Now, an easy way to kind of memorize this for each section is that we're going to take the balance sheet and we're going to split it into accordingly how the cash flow actually works. So I've mentioned before, right? our very first operating type of activity would be anything that's a current asset or an other asset, okay, that holds some kind of dollar value. Now, in this case, right, we're treating as an accrual type of an account, and we're kind of converting it into cash basis, okay? Now, this is going to be semi confusing, right? Okay. Now, rule of thumb first is we're going to look at part of operating activities is we're going to look at anything that's a non-cash value. Okay. So like I said, we're going to split up our balance sheet and go ahead and pop the areas in there. But at the same time, right, we also need to look at our non-cash transactions, which exist on both your balance sheet, but you're more likely to find all the details in your adjusted trial balance. So as I mentioned before, right, it's a mix between those two worksheets. So let's go ahead and start off with our non-cash value, right? So a perfect non-cash expense would be anything that we've calculated down below here, right? It would generally be anything that we have subject such as depreciation expense, right? Bad debt expense and amortization expense, right? When we say non-cash transactions, right? Here's the question. Did we actually spend $625 to depreciate our assets?
No.
No. We just took our dollar value of the amount that we invest into our company or into our assets, and we transferred them into another account. That's going to be a non-cash transaction because in this case, right, it's invisible money that we're transferring. Now, our current assets are still at whatever the historical value there are, right? So in this case, this non-cash transaction right here, right? We transferred $76.60 from bad to bad debt expense, right? Now, bad debt expense, did we actually receive the money in the first place for us to call this bad debt?
No.
No. So there you go. That's going to be another example of a non-cash transaction. So we're going to do those ones first, and then we'll go ahead and rule out the other ones, and then go back to our balance sheet, okay? So first thing we're going to do is we're going to add back any non-cash transactions because they were money that we took out from the company, but in reality, right, or in theoreticals, we can do it, but in reality, you can't take money out, right? That's not how real world works. You can't take out this money from an asset. So in this case, our first entry we're going to have here is bad debt expense, right? Because that's something that we took bad debt for money that we've never received. So in this case, we're going to add back the value of $76 and 60 cents. Yes, thank you. Okay, so we're going to add this value back, right? Depreciation, right? Same thing, right? We took money out from our assets, but in reality, you can't take money away from your assets. Okay, so that's a non-cash transaction, which we need to add back. All right, and in this case, we're adding back to our cash flow of $626 because we never actually spent the money in order to incur this expense, right? No money was actually physically taken out, so we need to add it back to my cash flows. Okay. Same thing with amortization, right?
Right.
Okay. We need to add that back to our pile of money because in this case, we didn't spend $11.67 to incur for my amortization for goodwill. Okay. Now, another thing that we have to also do here is that we have to also add back my loss on disposal of asset. Because in this case, right, when I sold my furniture, right, I said I lost $2,000. Now, did I actually spend $2,000 and lose it?
No.
No. In this case, that's also a non-cash transaction. So I need to find my loss on disposal of asset, okay? Because once again, right? You can't say that we spent $2,000 to lose to because we sold our furniture, right? You can't say we lost that. That's invisible money that we claimed, right? That we lost. But in this case, no, you didn't. All right, so we need to add those back in there. So those are our non-cash transactions right there. Okay. Now, the next thing that we have here is going to be anything that's going to be a current asset, like I mentioned before. So let's go ahead and take a look at my balance sheet. Okay. So the first thing I have here is going to be my total accounts receivable. Now, in this case, my accounts receivable here also includes my updated version, right? Including my bad debt. I've already added back my bad debt. So if you add this, add fair at its actual amount, right? It's going to, you're double entering in that number. So in this case, right, we're going to actually have to go to our adjusted trial balance because I want to know what my true amount is in my accounts receivable, right? Without taking the bad debt, because in this case, I've already added back the bad debt. So I'd be doing it twice if I add it at 1455.35, right? I want to add it from the amount of accounts receivable, right? Because in this case, right, did we actually receive this money? Is this money that we actually have for the company, or is this money that we don't have?
No, we don't have.
We don't have. So in this case, right, we need to understand it like this, right? In this case, oops, I'm going to click on this account. So there you go. Accounts receivable, right? Because we're looking at cash flows, right? If we never received the money in the first place, right? This is the money that my customers owe me, right? So if I understand that I never received the money, right? So then all of these sales right here or my net income, right? A portion of that money is money I never received. So in this case, I need to subtract it out because that's money in my net income I never received. So therefore, a portion of my sales were things that I claimed I earned, but never actually received the physical cash for. So in this case, I need to subtract the money because I never had it in the first place. Okay, so in this case, I'm going to subtract out my full amount that people owe me for the $15,031.95 because in this case, I've already added back my bad debt expense. Okay.
Wait, so we did make, so we did accounts receivable equals negative 1531.95?
Mm-hmm.
Okay,
Because my net income, right,
right.
says that I received money for this transaction right here, right? This because my net income includes all the sales, right?
Right.
But I never received the cash because the idea here is we're converting from accrual to cash basis. So the question is, did you actually receive cash for these sales? In this case, no, we didn't. So you need to subtract out because accounts receivable is money that you never earned, money that you never received. It's IOUs. So you can't count that as part of your cash flows because it's money that you never got in the first place. So that's how we understand how we complete our statement of cash flows is because we're looking at the amount of cash we actually received. Okay, so in this case, we never received $15,031 of our net income because the net income includes all of our sales, cash and credit sales. Okay. So here I'm converting it, saying, well, I never received 15,000, right? I'm 1,500. I'm still owed this amount right here. Okay, I'm still pending on people to pay me. So in this case, I never received it from my original net income. So I need to subtract it out from my total amount. Okay. So let's go ahead and see what the next one is going to be, right? So the next one is business supplies. Okay. In this case, right, my business supplies, right, it holds a value of $510.10. Now, in this context, right, I'm still holding right now $510.10, right? But in reality, when we look at it, that's money we've already spent. That money is gone. We've already contributed to my business supplies. So at this point, all I can do is just sell my coffee cups and just get rid of that amount. So this case, right, we need to subtract out $510.10 because that's money that we already spent. We don't have that money in our hands because we purchased business supplies. So in this case, it's money that I don't have because I bought stuff with it. So in this case, I have to subtract out my amount here for the 5, 10, and 10 because I already spent the cash. I already bought the supplies. I don't have the $510. Okay. All right, let's go ahead and take a look at the next asset that we have, right? Office supplies, same thing here, right? It says that we have $80 worth of office supplies. In this case, right, same idea. I've already spent the money, right? I've already paid $150 to office supplies, and this is how much I have left, right? So in this case, this $80 is something I don't have. You can convert it, right, into cash by giving it back to the store. But in this case, right, office supplies, you probably opened them. So in this case, my office supplies is something that I've already spent the cash for and traded it for an asset. So this is money I don't have. Okay, so go back to my balance sheet. So again, $80 is something I don't have. Okay. Going back to the balance sheet. So the next set of items here is inventory. Right? Same idea here. I have a total of $611.17. However, I haven't sold it yet. It's not cash to me. I haven't sold it yet. So in this case, I'm still holding it as if I purchased it and I'm waiting to sell it. In this case, that's $611 that I haven't sold yet. So therefore, that is money I haven't received yet. So that's going to be another negative $611. Now notice this. Oh, there's a trend going on now, right? You're noticing that all of your assets are going to be things that you've spent money for, and that's correct. Therefore, you're going to subtract all of your assets, okay? And guess what? Opposite's going to happen for your liabilities because it's money that we haven't paid yet. So therefore, we still have that money. So in this case, all assets are going to be subtracted. All liabilities, or in this case, current assets and other assets are going to be subtracted because it's money that you've already spent and it's cash that you don't have anymore. So that's the idea here. So inventory was the last one that we did. Next one we have here is going to be, okay, so not fixed assets, okay? So furniture doesn't count. Office equipment does not count. Equipment does not count. And vehicles do not count. So now we have other assets, which we have, right? prepaid accounts, we're going to add back, okay? Or in this case, we're going to subtract out. We don't have we have deposits as my other assets. We also have goodwill, okay? Now, of course, we're going to subtract these values out because once again, right? Prepaid accounts. This includes, right? Rent I've already paid for. Insurance expense I've already paid for. I don't have that money anymore. So therefore, it's going to be money that you subtract out of your amounts. Same thing with your deposits. You don't have that money anymore. So negative 17. And same thing with goodwill, right? We've already purchased the business name. All right. Okay, so this one, I have amortization already in here. So in this case, I have to do it at the full price of it because once again, I already added the amortization back already. So in this case, I should have it for the full amount of $2,100 that I solved in my adjusted trial balance because that's just how it is. So goodwill for $2,100. Okay. So that was just all my assets. Okay. Now I have to go through all my liabilities too because liabilities is also going to be part of your operating activities. So the first one here is accounts payable. Okay, so balance sheet. My liability is going to be accounts payable. Now here's the question. If I owe a total right now of $6,620.91, okay? The question do we understand is that, did we pay them yet?
No.
No. So that means that's cash that we have. So in this case, we're going to add it to the pile, right? Same thing with the notes payable, right? Did you make a payment yet?
No.
No. We still have it. So that's the idea here is that notes payable is something that you still have, okay, for $69.49, right? Our payroll liabilities, right? Did we pay the government yet?
No.
No, so therefore we still have that money. Okay, for the 791, okay, 54. And I gotta add a little more. Yeah, I gotta add like 2 more. Okay, so next that we have here is our sales tax payable. Did we pay the state yet?
No.
No, not yet. So therefore, we still have our $2,046. Okay. And of course, last but not least, interest payable, right? Is something we didn't pay yet. All right, it's a separate expense that we have to incur for borrowing money. So in this case, interest expense, right, is something that we owe to the either the loan or the credit card. So in this case, we never paid them. So we still have the $28.29. Now, once again, loans is going to be part of financing activities. So here, like I've mentioned before, right, you have your non-cash transactions first, right? Invisible money that we took out, which isn't true, right? We got to add it back into our pile of money. Then all assets, current assets and other assets, right, are money we've already spent. Or in this case, for accounts receivable, we never received, right? Same thing with all of our liabilities, right? We never paid them, so therefore we have the money.
So we didn't put the truck loan, right?
No, because that's part of financing. Okay. So there we have it. Okay. All current assets, other assets, and current liabilities is going to be your main operating activities. So in this case, go ahead and equal sum this.
Mine came out blank too.
Oh, you just have to change the color. So I'm gonna change it to black. There you go.
Negative 325.16.
Let me check that again.
I got negative 365.12 cents.
Okay. I mean, I self-referenced all of mine, so okay. So
I got it. I figured it out.
What did everybody else get?
That's what I got now. 330. I was missing that 28.29.
okay. So Nicole, you're off by like $5, right? So
Weird.
I'm off by $11.
okay, so that's probably your amortization expense. Go ahead.
I I put my equal sum in there and nothing comes up.
Okay, it's because you have to change. I think I blinked it out. I wadded out for this one, so
Change the font.
you may have to change the font color.
I have my amortization. Can you read them going down?
Yeah. Okay. So first one is going to be bad debt for 76.60. Then I'm just gonna read the numbers. Okay.
Yeah.
625.95, 11.67, 2,000, negative 1531.95, negative 510.10, negative 80, negative 611.17, negative 6654.17, negative 21. Oh, sorry, negative 17 for deposits. Then negative 2,100 for goodwill. For okay,
100 for Goodwill.
oh yeah, 2,100, yeah. Because in this case, I've already added back my amortization. So in this case, I need to take it at the original cost that I had it. Okay.
Yeah, both that, for some reason, that block, the font and the color were both white.
Mhm.
You said that, but weird part is I formatted this already and don't even know. I think maybe I only hit bold, and so it might have not changed that. But that was just so funny. You said that, and I looked. I'm like, oh, that's a dumb mistake. But
It is,
I
I
got
know.
the negative 33683, so I'm good.
Perfect. So again, net operating activities. It's up to you if you want to do this. Okay, I'm gonna take my net income, right?
Can you wait a second? I'm still touching up my deposit. And then it equaled, what was the total?
Negative 336.83.
Or on cash flow net operating. There's something was way off on mine. The prepaid was negative 6654.17, right?
That's prepaid. Yes, negative 66.54.17. Yes.
Deposits was negative 17. For Goodwill, where did you get the 2,100 at?
Like self-reference, I self-referenced it from my adjusted trial balance, but that's what originally it cost me, 2,100. Since I already added back my amortization expense, I need to add the goodwill at its historical cost value.
Okay, got it.
So in order to solve for your net operating activities, right, we're going to take the difference between your total net income, right, and you're going to subtract out your 33683, right? In this case, because it showed up as a negative, I'm just going to add those two values together to get a total net operating activities of,
13,264.17.
okay? So that's just after all my operating expenses, okay? Or activities, excuse me. All my activities that I've done so far. Okay, that's just the main core, right? Excuse me. Now the next section here is going to be all of your fixed assets, okay? Okay, but before we do that, right, the first thing that we did here was we sold furniture, right? We purchased furniture, right, at $4,000, and we sold it to get money back, right? That's going to be considered an investing activity because what did we do? The investing activity is purchasing things such as fixed assets that allow us to operate our business. So in this case, right, our first thing that we did was we purchased furniture. However, we sold that furniture, okay, and we gain money out of it, right? We got $2,000 cash. So in this case, that's a plus to our bank account, okay, or plus to our overall cash flow, right? Because we gained $2,000 from that sale, okay? We also purchased furniture, okay? Now in this case, right, we purchased a total of how much for furniture? What was our original investment in the total amount of furniture that we purchased, right? So in this case, not book value, because book value, right, we already added back the depreciation for this one. So in this case, what was my total amount that I actually purchased my furniture originally for? So I may have to go to my unadjusted trial balance to find that answer. Okay, what was the total amount of furniture that I purchased?
$9,033.75.
Good, 9,033.75. Now in this case, right, do we have to understand it exactly like how we understand it, right? If I purchased my furniture, did I spend the money or did I gain the money?
Well, if you purchase, you spend it.
Correct. So in this case, do I actually have the 9,3375? In this case, no. I already spent it because I used that money to purchase the furniture, okay? And I have to purchase it at historical cost, right? Because I already added back the depreciation, okay? So again, investing activity, right? We're looking at how much we actually purchased for the company. So we have to look at historical costs in this place, okay? So there you go, furniture, which we originally purchased it for $9,333.75, which, again, is that cash that we have? No. We spent it in order to buy it, okay? So then again, we're going to go through all of our fixed assets, okay? Right? So we purchased, let's see. We purchased office equipment, right? We also purchased equipment itself. And lastly, we bought vehicles, okay, or we bought a truck. So therefore, that's all the investing activities that I have there, right? This is what I've purchased, right? And we're going to do it exactly how we purchased it, right? We purchased it at historical cost. So in this case, what was my total office equipment before taking out my depreciation? So in this case, unadjusted trial balance. So my total office equipment.
2863.20.
Okay, make sure they're negative because it's money that you've already spent. You spent it in order to invest into the company. All right. What was my total equipment?
Minus 8650.86.
Mm-hmm. And lastly, what was the total amount for my truck?
32,208.90.
32,208.90. So in this case, what was my total right here for my investing activities? So once again, this is also I think it's another blank column here. So equals sum. So what was the total amount of investing activities?
$50,756.71.
Right? That's the money that I spent in order to invest to purchase all of my fixed assets. Okay? So therefore, now I'm going to find the difference between them, right? I'm going to take my net operating, right? Because that was my net income, the difference between them, the net, okay? And I'm going, in this case, I have a negative number. So I'm going to add my negative 50,000 because that's how much I invested in my company. And what's my net investing activities?
$37,492.54.
All right, so I'm at a negative number here. Okay. All right, spare me about 10 more minutes after class. We're almost done here. I don't want to stop here and then come back tomorrow. So, last section is going to be my financing activities. Now, number one here is going to be your loans because again, we took a loan. When we took a loan, what do we get out of that? What happened?
On hand.
We get cash on hand. That is correct, right? That's what taking a loan does, right? It allows us to get the money we need to do whatever we need to do. So in this case, I did take a loan. Okay? Now, how much was my loan for? So in this case, I have to look at my original amount for my loan.
Wasn't it 30,000 or?
Let's see. Original amount for my loan.
Is it 28,445.14?
Okay, no, that's because that we were supposed to make a payment for that, right? In this case, what did my original amount that I took a loan out for?
29,221.90.
Mm-hmm. This is my original loan that I took out. So there you go. Boom. There I have it. Original amount of loan, right? That's money that I got from the bank, right? So in this case, this is going to increase my cash flow. All right? Last thing that I did here was I also took money away from my company, right? If I took money away from my company, that's cash I lost, right? So now we got to go find my owner's withdrawal because that's money I took out from my company. So that's money I don't have anymore, right? That's cash I took out. So in this case, it's going to be for a negative $3,000. Okay. So once again, here I'm going to find the difference between these two. So again, this is something you have to get the color back for. So in here, what was my total financing activities? So in this case, I can just add these two numbers together.
26,221.90.
Okay. And then let's counter it against my net numbers. So what should be my total, my net financing now?
Negative $11,270.64.
Good. Okay, so that number, okay, so what this number represents is going to be the difference in cash flow. All right? So this number, right, is the difference. This is the amount of money that I spent in grand total between my operating, my investing, and my financing activities. Okay? Now, as of June 1st, how much money did I actually start with? In this case, right, if you remember way back then, it's not really June 1st, it's June 4th, right? Because we didn't start our business until June 4th, right? In this case, we're not going to recognize what we started it with, which is the $30,000. We're going to recognize when we open our bank account. How much did we actually start out with? Okay. So if you don't remember this transaction, it's going to be for the $21,625 is what I originally started out the company with. Okay? Because of course I bought stuff right in between. This is what I started out with cash flow as of June 1st. Well, in this case, June 4th, because I didn't start my business until then. So that's the amount of cash that I should have, right? So therefore, your ending amount of cash is supposed to be this number, right? Subtract the 11,000. So my amount that I should have right now in my cash account, my bank account, should be $10,354. But let's check my my balance sheet. Do I actually have $10,900 and something dollars? No, I'm way off. So in this case, right, I'm gonna place it here because this is what I'm supposed to have. Okay, I'm supposed to have $10,000 in my bank account, but right now I have a total of 13,000 in my bank account because that's what I have for my bank. Is I have $13,952.60. So here I am looking at a $3,000 discrepancy. All right. I don't know where my 30,000 went. Now, let's say I did have my original of 30,000 in here. No, that means I'm out way more than that. Okay? At least with my 21,625, that gets me significantly closer. Now, where did this $3,000 go? I don't have a clue. I cannot explain it, but this is how you would actually take a look at the statement of cash flows and convert it into a cash basis. All right. Now, once again, that's what you're supposed to do, but I don't know where these $3,000, they disappeared somewhere. I don't know where they are.
Hold on, I have a question.
Mm-hmm.
You have the 13,952.60 in there. But that's not the sum I got when I take the 11 or negative 11,270.64 and add the 21,625. I get 10,354.36.
Yes, that's exactly what I have here. Okay, so let's go ahead and put that together. Sorry. So this is what you're supposed to have, right? Because it says right here, what's the cash flow as of June 30th? What's the cash that you have in your bank account right now? We're supposed to have only $10,354, right? But in our books, right, we've already calculated that in my balance sheet, I have a total of $13,952. So here, my discrepancy that I have between those two numbers is, I don't know where this $3,598 went. All right? Now, as I told you many times before, as we progress and go through each and every single one, it gets worse and worse. Okay? Sometimes I'll be off by $52. I've been off by $5.62 before. And I still can't figure it out today. And me and Mr. Sanchez have been working on this together for the longest time, and we can never find where that extra money goes. So even when he did it from the very beginning, he's always had a discrepancy. So in this case, right, I don't know how to do it. And no matter how much research that you do on it, this is exactly how you compute the statement of cash flows. Okay?
So you're saying that we should have came out with the 13,952.60 to make everything equal. Is that what you're saying?
Correct. Because the purpose of
You just
doing
gave me a challenge. Thank you.
all right, if you want to find where that $3,598 went, you could go ahead and find this discrepancy. But that is how we do the statement of cash flows because, right, we start off with an account balance, right? Everything that we've done so far for the company, right, for operating, right, that's the money that we did for running the business. The second part was the money that we used to invest to make purchases of assets and stuff. And then the last one is what additional things that we've had to finance the company, right? In this case, we took a loan out, and of course we took money away from the company, so that hurt our financing operations, right? So in this case, right, this is what's supposed to be. It's supposed to be you're taking your beginning balance of cash flow, right, of $21,625, right? The amount of your ending at your net financing activities, you're supposed to counter them to get you your total ending balance of cash that you should have in your bank account as of June 30th. But in this case, it's supposed to be $13,952.60. But in this case, I don't know where this $3,598 go. Okay. All right. So once again, for the sake of this class, I am not going to test you on